Good day, ladies and gentlemen, and welcome to the show on this Monday, the 22nd of August, 2022. Thank you for tuning in. I'm glad to have you guys here. Now, here's the thing. The Fed, tricky as they are, they've done some sort of backdoor, I'll call it backdoor quantitative easing that they were doing. When the stock market, I'm talking about the Dow Jones, went down to 30,000 and the S&P 500 followed suit down to these low levels. I believe the marker was in on the Dow, 30,000. I think that was the marker. And then they did this backdoor quantitative easing that I think that they didn't tell any of us what they were doing. But now I think they've ended it. And so effectively, they put the stock market back up about 3,000 and change, back up again. I think it's over now, and the stock market's starting to fall back again. Will they start it again? That's a big question. To see when they start it and when they stop this, I think you got to look at the debt market. Take a look at the U.S. 10-year Treasury specifically. This is going to give you your indicator. You know, we're seeing Treasury yields starting to rise today, which is an indicator that they're not doing this. Because who's going to want to buy this stuff unless the Fed's buying it? And I think that when you see these dropping yields suddenly drop down, heading toward 2.5% on the U.S. 10-year, when they're up over 3%. And then what we see markets recover. When the opposite of that happens, we see the U.S. 10-year yields rising like they are now, heading up towards 3%, and they start to exceed 3%, heading towards 3.25%, then we know that the Fed is letting things go again. And of course, this is a cycle that they might play out several times, but each time we're going to see the U.S. dollar index rising at the same time. And so let's get in there and take a look at these markets, and you'll see what I'm talking about right now. Let's start the charts right here. And first we're going to get in there and take a look at the silver price. Now, what I wanted to say about this silver price is, I can almost, in my mind, evaluate what the cost of production is. So you got a floor there, the cost of production. I'm thinking it's probably about 16 US dollars per ounce is the cost of production, including all the things that they need to do to get it into a coin form. I'm thinking it's probably about 16 bucks. So they can't let it drop below that price, or the miners just aren't. Miners have to have a small profit margin. So see, right now, let's just say, for sake of argument, the cost of production is around $16. So they only got a $3 profit margin there between that and the spot price. Between the cost of production and spot price, only $3 margin there. Of course, to you guys, it's kind of meaningless, because when you go to buy the real physical product now, at this point, you have to pay quite a steep premium. And so, but I think this is important to the people who are manipulating the price of silver, not to let it go below that margin that they have profit. So I think there's probably a floor underneath this, I'm guessing. So if we get some deflationary pressure on this, they could possibly let it go as low as that floor. But then how much is other stuff going to drop? If we get deflationary pressures caused by the Fed continuing this monetary madness that they're doing, I call it madness because them pulling $95 billion a month out of the financial system for their quantitative tightening, which is similar to what they were putting in at one time, got the markets up to where they are today. Of course, if you put a leg under the table's going to be stable. It's going to stay up. You pull the leg out from underneath the table's going to fall down. This is just exactly what happens. We are actually seeing that process in the markets, playing it in real time. We're looking at the silver price down 4 cents today, but there's a lot of volatility in this market right now. So we're at 1901 right now. Let's take a look at gold. Gold is 1736. It's up, down $10.70 on the day so far. Now I'm going to take a look at cryptocurrency. And we're looking at just over $1 trillion asset class, you know, when you count all the different coins. Bitcoin price at 21,265, 21,265, and Ethereum at $1,566. Now here's what I want to say about these cryptos. You remember I was just talking about silver and gold too. They both have a floor underneath the price that's the cost of mining production. And it's going to be very difficult for them to get it below that price because they just won't have any silver or gold. Mines will close down if they go too low on the price. There's no profit margin. Yeah, that's what happens in a modern day society. People's not going to work for free. Hey, I didn't know that. No, they're not. So mines are going to close if they can't make a profit. So there is a floor under gold and silver. But what floor is there under Bitcoin? Well, guess what? They do mine Bitcoin. And there is a cost associated with it. But, you know, that's way down there. Your cost of mining production is probably like 5,000 to 7,000 for a Bitcoin. Right? And so this wouldn't be beyond the pale to see Bitcoin go down to $10,000. It's not beyond it. It's like there's no floor there. There's no floor up there at 21,000 to keep the price there. Like I just told you about a floor that's under the gold and silver. Mining production cost. Well, Bitcoin mining production cost is way down there. So you could have a price chop and chop and chop again before you're going to get down to mining production cost. You know? And some of these coins would just absolutely disappear because I'm going to tell you what, you got thousands of these coins in here. Do you know how much your money is at risk with these coins right here if you get way down on the list here? Like once you're past coin number 100, and you know, some of the names of these coins should just tell you how risky they really are. Like let's go down here and let's just take a look at some of these. Kyber Network crystals. Raven coin. AMP. Coins like Harmony and Optimism. So I mean, the Oh My God network. Come on, you know. I mean, some people might come on my show and say, "Oh, I love that coin number 110 or whatever it is," you know. ABBC coin, Moonbeam coin. Do you really believe investing in something like Moonbeam coin number 128 is going to make you rich? Well, you might just lose all your money, you know. Coins like Wax. I mean, the Woo Network. Oh, that's a good one. The Woo Network. Yeah, secret coin. Here's a secret coin. Let me see what else they got here. Brain Trust. Come on. Dig Along Mars. Dogalong Mars. Elon coin. I mean, you know, these coins, well, there's old Digibyte. Digibyte's a good coin, I believe, you know, but I mean, it's getting way down on the list, isn't it? Spell Token. I mean, the Keep Network. I mean, they're going to run out of names for these coins. Look at this, Ellipus. The Wink Link. It's called the Weak Link. Anyway, guys, so you don't want to get too far down in these coins. And I mean, I'm only at number 100. I mean, I could go way out to number 500 or number 1,000. Let's go out about 6 pages out here. And there's 97 pages. Okay? And now we're getting to number 500, you know. And some of these names probably Pitbull coin, you know, Milk coin. I mean, I can laugh at it. Beefy Finance coin. The art, Smart of Giving instead of the Art of Giving. Smart of Giving. Honest to gosh. Do you think you're really going to get rich on this stuff? I mean, probably more than half. 3/4 of these coins are just going to disappear and they're going to leave you holding the bag and you ain't going to have nothing, you know? So I would say if you're smart, probably if you want to invest in crypto, I'd say stick with Bitcoin. Bitcoin's the number one. It's always been the number one. Probably always will be. Or maybe you could branch out to Ethereum or something. Or maybe those top 5 or 10 coins, you could experiment with a little bit. Be careful, because I'm going to tell you what. Like I say, Bitcoin does have a mining cost associated with it. That does put a floor under Bitcoin, but it's way the heck down there. It could probably lose half of its value from here before it would get down near mining production cost. Take that into consideration. But now take a look at gold and silver. They can't afford to lose very much more on the gold and silver price before they're down on mining production costs, especially with the price of energy going up like it has. And I mean that $16 on silver that I said mining production cost. I'm just guessing, but I think I'm probably fairly close. What do you guys think? Okay, moving on. Dow Jones Industrial Average today. Let me refresh the page. It was down 475. Now it's down 467. This is not unexpected. This is absolutely expected by me, watching the bond market and what the bond market's doing right now. Absolutely expected. Watch that debt market. Then you'll know what this market's going to do, what the stock market's going to do. You see that debt market start to, the 10-year yields start to fall. And that's a positive sign for the stock market here, because it means that the central banks are starting to buy that crap again. If you see it start to surge, the yields, you're going to see this market fall. At the same time, what you got is them messing with the overnight rates. They've been jacking it up 3/4 of a percentage point lately. I think they did 2 of those, and one at 0.5% or a half a basis point, and they can only take it so high with this. They're going to have to renege on this pretty soon. Let's take a look now at oil. Crude oil, 87.36, down $3.41. Now, see, there is another marker right there that is, when you see oil prices fall as much as $3, $4 in a day, that's deflationary pressure. It's very deflationary on the system when oil prices fall like that, fall over 3% in one day. But we're also seeing the fall in the market today. Let's take a look at the MOVE index. You see the MOVE index rising? That shows the signs of deflation as well. And this could just pop up overnight, this MOVE index. And that would be a sign of instability in the credit market. Bonds and rates today. Now we're looking at this 10-year yield. It's popped up over 3% right now. It's up 13 basis points today, so it's surging higher. We see the market's falling. 10-year at 3.002 and the 30-year at 3.24. Up 17 basis points. What's that say about Pfizer? Breaking news. Okay, it's something about the Omicrons and the shots and stuff. Okay, let's take a look at the dollar index today. U.S. dollar index today at 108.68, and it's rising. I'm going to tell you guys, I'm expecting that this U.S. dollar index could surge in the next number of days. And as long as the Fed is playing this game, and I think they're going to play this. I didn't expect them to be able to play it this long, to be honest, guys. It's a little bit surprising that they've got this deep into this. And I'm kind of interested in how far can they get with this before they have to renege and go back, before they have to... Honest to gosh, I'll tell you what this reminds me of. The Fed's like a mouse in a hole in a room full of cats out there. And how far are they going to be able to crawl beyond their mouse hole and get out there on the floor before they have to run back into their mouse hole again because of all the cats? That's the way with the Fed right now. How far are they going to get? And they're surprising me. They're doing really rather well of raising these rates and stuff and getting away with it, seemingly getting away with it so far. Even though they are doing some sort of backdoor shenanigans, you know, they're a tricky bunch, I'll tell you. Even when they do their statements, you know, they get up there and do their Fed statements and stuff, and they're at their Jackson Hole or whatever they're going to do. You know, they are tricky in how they word things. They like to try to fool you. They would make good poker players. Be able to keep a straight poker face when they got a handful of nothing and make you and bluff you into thinking they got a good hand. And that's what's happening with your dollar right now, guys. If you're invested in the dollar right now, the Fed is got a nothing hand. Poker hand. They're keeping a straight poker face, and they're making you think that this dollar has value behind it. For you dollar investors right now, you could get really caught with your pants down. And for now, the dollar's safe because the Fed's maintaining this thing that they're doing that in the end it can't go anywhere. In the end, they're going to have to give up on it. Like I say, they're like a mouse trying to crawl out to a room full of cats. They're going to get pounced on in the end. Not going to get away with this that much longer. And I'm surprised they've got as far as they have without having to change direction and go back to a very loose monetary policy. But it's coming. And when they go back to the loose monetary policy, you don't want to be invested here in the dollar. You want to be in real physical, tangible assets. And in some point in the future, I know I've been preaching this for a long time, but at some point in the future, you guys are going to say, hey, you know what? Glenn was right. Well, I should have been in hard, tangible assets and in things that have no counterparty risk. Really, to be honest, the safest bet is probably silver. Real physical silver. Unless you're rich and in real physical gold. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the next episode. Bye-bye.